Spain just won the World Cup. $51 million in prize money. The biggest payout in the history of the tournament. Sounds simple, right? Win the game, get the check. Except, they might not get to keep all of it. Because buried in the tax code of a country that didn't even make the final, there's a rule that says if you make money on American soil, America gets paid first. Wait, what? Yeah, doesn't matter if you're a US citizen. Doesn't matter if you've never filed a US tax return in your entire life. If you earned it here, the IRS considers it theirs to touch. It's called a jock tax. And okay, weird name, I know. But it's been quietly draining the paychecks of visiting athletes for decades. Most fans have never even heard of it. So how does $51 million actually turn into money in someone's pocket? Let's follow it. FIFA doesn't pay players directly. The $51 million goes to the Spanish Federation first. Reports suggest players split around 45% of that between them. Okay, still sounds like a lot. Split across a 26-man squad, that's roughly $880,000 each, before taxes. And here's where it gets messy. Foreign athletes earning money tied to work performed in the US can face a 30% federal withholding tax, not 30% of their whole year's income. 30% of the piece the IRS decides was earned here. Phew! And it doesn't stop there. The final was played at MetLife Stadium in New Jersey. New Jersey already charges a 10.75% income tax on athletes, on top of the federal cut. So exactly how much is actually left by this point, nobody publishes that number, which, if you think about it, is kind of the point. And here's the part that should really bother you. This isn't a rule someone invented for the World Cup. It's the same rule that hits every visiting player, every visiting team, every single time. When the Patriots and Seahawks played the Super Bowl in California this year, players didn't just deal with the game, they dealt with California's top tax rate of 13.3%. Some players will hand over more of their bonus to the state of California than they'll actually keep for themselves once everything is settled. Let that sink in for a second. Cross state lines during a season and you could be filing tax paperwork in a dozen different states. Cross into another country? It gets worse, because Spain's players don't just face the US bill. Spain taxes worldwide income. So technically, they could be taxed twice on the exact same money. Once by the country where they earned it. Once by the country where they live. There are treaties designed to stop that. Foreign tax credits that let you deduct what you already paid somewhere else. In theory, nobody pays the full rate twice. In practice, the paperwork alone could take a full-time accountant months to untangle. And that's assuming every single jurisdiction even agrees on whose rules come first. So next time you see a headline that says a team won $51 million, here's the thing. That number was never really the number. By the time federal withholding, state tax, home country tax, agent fees, and federation cuts are all done taking their piece, the amount that actually lands in a player's bank account could look nothing like what got announced on the day they lifted the trophy. The scoreboard said Spain won. The tax code had other plans.